margins. We said as we move towards the next 1 year, we expect to move closer to mid-teen margin, and thereafter we expect to go to high-teen margin.
Right.
Okay? So that's the direction as far as margins are concerned. As far as top line is concerned, I've said that, we've completed more or less the, restructuring. I expect next year to be more in the single-digit top line growth. That's more because the arithmetic impact of what we are discontinuing or discontinuing may still play out a bit some part of next year. But thereafter, I expect it to be a mid-teen kind of a growth.
Oh, fair, sir. Thank you. May I ask our CFO to understand, what are we doing, to reduce the finance cost, and depreciation will automatically come down as a percentage to sales once we start growing. But on this debt part, how do we would like to play really?
Sure. So on the debt part, since Raja explained how we have done a lot of restructuring, so various assets are getting monetized, which we are utilizing to optimize our debt structure to the best extent possible, and while at the same time investing in our business growth. So that is, and also debt level is correlated to the kind of business growth we are foreseeing, and that is how it will be correlated going forward as well also. On the depreciation part, I think most of our capex has been done, and we are pretty ready with that. So depreciation, I don't see much of increase happening soon. There will be some maintenance capex to optimize and do some backward integration. So depreciation should be pretty on the same line, or maybe slight increase.
So finance cost will keep on coming down, or it will remain at this level,
That depends on the overall guidance given or the rate movements by RBI, which is also dependent on the global factors. We all are hoping starting second of the financial year, we should get some respite. So it is kind of dependent on that as well.
Sir, but my question is, reduction on the debt can also bring down. So for reduction of the debt, what exactly are we doing? You said that we after discontinuing Tarapur plant, are we having up that asset, or we will continue to hold the land parcel the way it is? And so what exactly other asset that we have, which is a non-core, and we may bring down the debt apart from bringing it down from the generating the profit of the company?
No, sure. So I think I have explained that, but let me repeat that. So wherever we are seeing a non-core asset which can be monetized, we are monetizing those assets, and that is being used either to trim down the debt, if possible, or to fund our operation, not to increase the debt at least. So either way, the debt level is getting managed. If we don't repay, but we don't add on to the debt, that itself is a kind of optimization of the debt level.
And plus, I think it's also that with the kind of growth that we are seeing, both in our margins and therefore in absolute EBITDA and top line, we expect that we will be very, very prudent with any of the ratios which are there, and therefore we don't expect that to move up. In fact, over a period of time, it will come down.
And so last question on our presentation, what we offer API formulation, and last piece is analytical services. So what exactly that suggests, and are we already doing some kind of a services?
No, so we have a subsidiary which is called Sequent Research Limited. Now, because it's an independent, fully owned subsidiary, it provides testing and analysis services, both in-house to our own business as well as to some other customers outside. So it's listed as a separate line item. It is not a strategic area for us. It is a in-house company which supplies services to our own business.
Oh, thank you very much, sir, and all the best. Hello.
Thank you very much for your support. Yeah.
Thank you. Next question is from the line of Sachin Kasera from Swan Investment. Please go ahead.
Hi, good afternoon. Congrats on improved numbers. Couple of things I just wanted to say. One is on the capex side. What is the type of capex plans we are having for the financial year 25 in broad estimates that we are having?
Do you have any other questions, or that's the only question?
I have 2, 3. I just thought I'll take up one by one.
So can you put all the questions together? Then we can just put them together.
Yeah, and thanks. Second was in terms of, the fact that you indicated that now that we are more or less done with the restructuring, every year we'll see both improvement in terms of margins as well as the rate of growth. So does then it mean that we should be able to repay some of our debts? And finally, in terms of, what are you share some aspirations in terms of revenue growth and margins? How about the return on capital, which is the most important parameter to get the health of the business? Right now, obviously, because of the stress and the restructuring, there is a negative terrain. But what is the aspiration there over a 2-3 year period?
So maybe I'll just go to the second piece of it, which is on margin. I think we've already margin and revenue. I've already indicated before we are looking at ending this year in double digit. We move more towards mid-teens by next year, and then the idea is that we should be moving towards high teens and EBITDA margins in the following years. As far as revenue growth is concerned, we will still have some legacy, I would say, financials from in next year. So we expect it to be in single-digit growth as far as top line is concerned. But thereafter, this business is clearly set for mid-teen double-digit growth from the following year. So that's as far as revenue.
That was not my question. My question was that that was not my question. My question was that, yes, I understand that you indicated improving margins and improving growth. So does that mean that the free cash flow from operations will go up and we should be able to repay some of the debt, or we have a high capex plan because of which the debt will be...
I'll come to the second question. On capex, generally, we do not have any, out of the ordinary plan. We have our current capacities, which are, enough to meet what our immediate requirements is. Though, as I've indicated also, that the place where we are looking for is in the area of our back-end intermediate capacities, etc. There are opportunities. But we expect, obviously, an improvement in the cash flow situation available after that. So there's no extraordinary capex expected. Most of the increasing earnings should help us improve both from a debt side as well as improve our cash flow. Yeah. Obviously, like Saurabh said, as we begin to dispose of some of the assets, those will be utilized both for, retiring some of the that we may have if required, and at the same time, also, funding any of our existing operations. So we don't, see any significant capex requirement, which is coming up over here. Saurabh, you want to add anything?
No, I think you have covered everything. So on the debt, I think the question Raja has already explained, but debt again, so our working capital requirement may go up once we increase our business size. So debt will always be a combination of the business growth. So we are very conscious of our debt level, and there is internal benchmark we have on our debt equity levels. We monitor it very, very closely, and only depending on the business requirement, we will fine-tune it. So we'll do the best required on that area. Be assured of that.
Yeah, but just to take it a little further, if I see a working capital, this cycle is close to around 110 to 115 days. And from the type of growth that you are indicating, the incremental requirement there should not be more than like 40-50 crores according to me. And hence this question in terms of if you could, because our debt levels are currently fairly high for the EBITDA that we are generating. And hence that is one of the key things investors are looking forward to, that if we can reduce our absolute debt and you could give some indication on that front, either in terms of debt to EBITDA target that you are having or in terms of debt to equity, that would provide us some more comfort on the balance sheet strength and our ability to, see through some of the, and maybe in case any stress that comes in the economy.
Yeah, sure.
I think we can take that on a one-on-one separately and be able to give you that.
Yes, that would be better.
Yeah. And my other question was on the return on capital employed or return on equity. Are we having any aspirations on that front, apart from the improvement in growth and margins that we have indicated?
Surely that will improve. So as we explained all through the thing in last few quarters, the entire thing is to improve our efficiency and EBITDA going up. if the EBITDA starts going up, which we are seeing in last 2 quarters, and we believe it will further continue, EBITDA going up will automatically drive all the parameters, including ROC, ROE, etc.
Okay. And just one question in terms of, you have also mentioned about inorganic opportunities. So what is the type of opportunities you are pursuing in terms of some indication on size, like small opportunity, they could be little larger ones, and how will we fund it, considering that our debt levels are fairly high? In that case, we may look in terms of, raising some equity, or how do you plan to fund that? Or we are comfortable even getting up some more, or do we have some non-core assets that we can monetize for acquisition? If you could give us some insights on that.
So first, on the kind of assets we are, or the kind of M&A we're looking at, there are only 2 areas which interest us. One is, anything which is in the companion animal side, if it's, something which we can bolt on. That's an area we are, of course, growing organically as well, but that's one area which we could be interested in the formulation side. And on the API side, we certainly will look for any asset which, helps us augment or gives us a real step jump in our R&D capability, as well as any backward integration which makes us more competitive, right? That's really the 2 core things. We're not really looking for product supplementation, and we're looking primarily to look at where there can be a real step up, which gives us an advantage in terms of time to market, etc., in terms of either R&D or in terms of, cost competitiveness, backward integration on API. So that's really from the kind of. In terms of the size, I think it's very clear we are not going to leverage ourselves, to beyond what we are currently at in order to do this. Yeah, and so that brings us to the third question of where will we, raise the funds for this. I think we, have strong belief from our, principal shareholders, as well as other sort of companies who are interested in our success. And we believe that if required, we'll be able to raise any kind of capital which is required for that.
Okay, thanks.
But we're certainly not looking at leveraging ourselves, unreasonably to fund any acquisition.
Thank you.
Hello? Yeah.
Next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity. So I have 2 questions. One is on your revenue guidance. Will that growth be primarily coming from the current business, or you are expecting in that guidance that there be some acquisition that you have been elaborating about? And the second question is regarding the gross margin. So we have shown a significant improvement year-over-year. So when you talk about your EBITDA margin improving, is it going to be a factor of gross margin improvement, or is it purely the operating leverage that will come about from revenue?
Thanks. I'll leave the margin question to Saurabh, but I'll answer the first one, which is on growth. So the guidance which we are giving is most of the growth we are expecting from existing businesses. We are not, and that's why I'm staggering it between, what will happen immediately in the next 6 to 12 months and what will come later, because we expect a lot of the work which we have currently done to actually flow into revenue growth towards the end of next year, and therefore going ahead, that should get us into the kind of growth level which I've indicated. But that will be from, I expect it to be, it's designed around our current business. It's not designed around any kind of M&A. M&A is not really only for growth. It's also, as I said, it needs to be strategic. It needs to give us R&D capability. It needs to give us backward integration capability. So immediately, we are not sort of jumping into M&A just because we want to add something to top line. The top line growth will come more from existing businesses. On margin, on gross margin and how it flows through, I think Saurabh can elaborate. Yes.
Sure, Raj. Thanks. On the margin, it will be a combination of various factors. Obviously, our gross margin will improve because we are having, as Raja has already explained much in detail about the strategic restructuring of our portfolio, various price increases which we are taking proactively, and also reshaping the overall portfolio to improve our margin profile. Second is on the various CIP projects which we are driving, which helps us reduce our RM cost overall. So because of these two factors, our gross margin is improving, and we believe it should continue in the current trend. We see some more improvement coming up in the next few quarters. On the operating expense part, we have been very conscious to control the OpEx overall, and if you have compared or seen our financials, it has going down quarter on quarter. So now we have a base reduction in the OpEx, and we want to maintain that. So OpEx will also contribute its part. Overall, on EBITDA level, it will be a mix of both. There will be increase in gross margin, and there will be optimization of OpEx. So both will drive the EBITDA margin up.
Understood. Saurabh, if I may quickly ask a follow-up. Any guidance around the gross margin, like from 45% today, where do you think it can go up to in the next 2-3 years?
See, exact quantification will be different, but we can see 150 basis points increase in next couple of quarters minimum, and then after that we'll see it will further improve. But the improvement would be consistent in next few quarters.
Got it. Thank you so much, and all the best.
Thank you.
Thank you. Next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead.
Hello. Hi. Thank you for taking my question.
Hi, Kaustav. Yeah.
So just wanted to understand what your outlook is on the Turkey market, and is there any way we are thinking of protecting our business in this market from the currency volatility?
So thank you for asking this question. So I think Turkey has been through a lot of challenges economically, both one, because of inflation, and two, because a certain direction of economic policy, which did not help as far as the currency is concerned and as far as inflation is concerned. What we've seen on the economic side is that the government certainly has brought in a completely sort of more conventional approach to managing the economics, and therefore we are seeing higher interest rates. We're seeing a bit more steadying at the rate of devaluation, and inflation, of course, is continuing to be high, and that's being managed now with higher interest rates, which is quite the opposite of what was being done 2 to 3 years ago. So the sense we have over there is that things are a bit more predictable. They're on the higher side, but they're more predictable, and therefore it's a very large market, and for us as well as for the industry. Therefore, we want to take actions which are going to help us strengthen our position and be there for a longer time in terms of improving our competitiveness. We've done 2-3 very quick and fairly aggressive actions on that. We have been fairly aggressive on pricing, which was something which earlier was not part of the way in which most companies did it. So we are seeing that benefiting us. It is helping us hold on both to our market share, but at the same time, it is also helping us counter the inflation levels that are there. And because we are a strong company over there, we are in fact somewhat benefiting from it, because some of the fringe players in the market are the ones who are actually closing down or moving out, so our market share is strengthening. The second, the government's also intervening in terms of improving the demand side. So we saw for a couple of years a reduction in cattle population in Turkey as farmers began to opt out of rearing cattle because of inflation. But the government has now stepped up and has started importing cattle into the country, and to re-stimulate the availability of farm animals in the country. And we hope to see some pickup going up there, and that should help our business. And the third and most important thing for us as a company is that we have a strong manufacturing footprint in Turkey. We have a good plant over there, and we are setting up using Turkey as an export base for the company. So we are already, and that helps us in 2 ways. One, of course, it helps us in revenue, it helps us in getting good business, but at the same time, it also helps us hedge naturally for the foreign exchange risk which is there. So our exports from Turkey are getting stepped up, and we think that very soon we will be able to offer a natural currency hedge for import and export based on our operations there, and therefore should be less exposed to issues like devaluation. And be able to be stronger compared to other companies over there in the business. So overall, I think we will see, still some volatility, and that's more because there'll be a translation of currency issues which may be there for the short run. But I think from a fundamental business viability as well as running a business in Turkey, I think the market is now beginning to stabilize. So we obviously have to be very careful in everything that we do.
No, thank you so much for the detailed response. Really appreciate it. Best of luck for future performances, and hope you keep this turnaround strong. Thank you.
Thank you, Doctor. Yeah.
Thank you.
Okay, there are no other questions? Yeah.
Ladies and gentlemen, in the interest of time, we will take last few questions. Next question is from the line of Jay Jain from Finnovative Financial Services Private Limited. Please go ahead.
Yes. I hope I'm audible.
Yes, thank you. Yeah.
Good afternoon, sir. I have a couple of questions. First, what are your plans on the China front, which was one of the regions that the company was showing interest in post the Carlyle acquisition? Are we focusing on that right now? And the second one is, when are we expecting to do more filings in the US on the formulation side? And is there any timeline on the commercialization of those filings? Thank you.
Thanks for the question. So firstly, on the China front, I think a lot has changed. And on China, we certainly, are initially looking from a API point of view. China is more a competitor for us at this point of time. There are, however, opportunities for us to be able to export certain APIs to China. And it still remains, as and when we have an opportunity, we will move into supplying there. But it's not a strategic thing for us because much has changed in the opportunity which is over there in China for us right now. So it's not something that we would be discussing really or have it on top of our priorities in the next couple of years. On the second part, on the US formulation piece of it, we've completed some of the validations, etc. from Germany. We went to a pause for it because we closed the plant. We still have that live on our project list. As I said earlier, we are looking at a couple of FDA pre-approved CMOs which we have shortlisted. And this is something that we will be clearer in the next couple of quarters once we have finalized our CMO in India. And however, our completion of our dossiers, etc., is in progress, and we will be ready with the necessary tech packs, etc., which are ready for validation. I expect in the next quarter or so. But whether we will go all the way into filing formulations, etc., will be something that we will revisit in a couple of quarters because the project having been delayed, even the market opportunity may be different now. And the approach to doing it may be very different after 6 months. So we'll probably give you clarity on it only after that 6 months. Hello?
Thank you.
Yeah.
We take the last question from the line of Saurabh Patwa from Quest Investment Advisors Private Limited. Please go ahead.
Thanks a lot for providing this opportunity, sir. So just two questions. One is, can you help us understand on this ESOP cost, how do you see trending it over the next 2-3 years? And second question was on some, if an investor wants to have a detailed discussion, would you guys have started meeting investors apart from the calls?
So I'll ask you the second piece of it, and Saurabh will take on the one in the ESOP. So look, you can always write to us. We meet investors. We regularly do these calls, and as any investor, you can certainly write to us. If you have any clarification, either on our results or on any other point of view that you have in the company, and we'll be more than happy to share with you that. If you want any further interaction, then please write to our investor cell, and we'll take it up immediately after that. On the ESOP piece, Saurabh, maybe you can give a glimpse on the trending. Okay?
Sure. So on the ESOP, generally, in all the company, the schemes is generally the cost is front-ended. First few years are very high in terms of ESOP cost, and then it starts going down. Same is the case with us. First few years, which has already passed, was high in terms of ESOP. If you see this quarter itself, Q3 versus last year versus this year, we are almost kind of getting 40% saving. I think the trend will continue, and next year onward, it would be very normalized cost, because most of the front-ended cost has already happened in last 2 years. So you will see a reduction there also.
Okay. Yeah. So thank you, everybody, for the... Yeah.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments.
Thank you very much for attending this call. And I think you would have noticed that we are progressing in the right direction in line with what we have indicated, which is keeping our margins sort of moving upwards steadily, and also building the capabilities which we need for further growth and expansion, both on API as well as on formulation, and then using that foundation for triggering growth in the coming 2 to 3 years. Yeah? So we look forward to seeing you again next quarter with the results. Yeah? Thank you very much. And with that, we can close the call now.
Yeah. Thank you. Thanks for your trust on us.
Thank you. On behalf of Sequent Scientific Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.